The Zacks Rank, value, momentum, growth, and income all factor into Zacks Rank buys.
Well, in spite of the big market roller coaster ride, there does still seem to be some value opportunities out there. We're going to check in with Tracey Ryniec, our value strategist. She's uncovered a couple of more since we were here talking last. Ford Motor Company, one of them.
Yep, that's right. Everybody knows who they are, the big automaker. You know, cars are still hot. Everybody's kind of panicking, oh, the country's going into recession and, you know, things are bad, but not if you ask the automakers. Like, they're still cranking out the cars. They keep raising the guidance because every month it seems good. So now we're on to 17.5 million is the forecast for auto sales in North America this year. And even Europe has been raised. That's something like 16 million now, up from like 14 million. So they're buying cars again in Europe too. The areas that are a little bit on the iffier side, South America, because Brazil is not good. So estimates have been coming down there. And then China, estimates have been pulled back, but down from like 26 million down to around 23 to 24 million. So about a 2% cut. But North America is so strong, it's making up for everything else that's going on. And then Ford has the F-150. You know, that truck has been really like selling like gangbusters. That's a good sign for the economy because that means like small business owners buy those trucks when, you know, business picks up and they need to haul more things around, especially in construction and things like that. So a couple of their factories were not working at full capacity. They're back to full capacity now, so they're able to get those cars out to the lot. So I like everything that's going on with the automakers here. You can see the estimates are rising because the last quarter was strong again. Some people, again, are concerned about how long can North America keep this up? How many cars are we going to buy? But I know people who just bought new cars in the last month. People who were driving, you know, cars like 12, 13 years old. My car just died, but I haven't bought anything yet, but I will eventually. And so all these people with the older cars are still in the process of trading them in. And, you know, cars have come so far in the last decade since most of us have bought our last car that, you know, they're not even thinking about going with used, even though the used market is hot too. But, you know, they're going with all the gadgets and everything that's on. So you can see the estimates rising. Like I said, earnings are supposed to grow 45% this year and another double digits next year, just not quite as strong. Other fundamentals look really good. They pay a dividend again.
They do.
Yeah, and it's 4.3%. That's nothing to, you know,
sneeze at.
Yeah, that's pretty juicy there. And you can see I put up the chart. It's kind of been back and forth. And then in this recent stock market correction, it has pulled back. So I do consider it a buying opportunity on any weakness here. Shares are trading about 8.5 times. That's cheap, certainly compared to the overall market. The automakers usually trade around 6 to 9 times. So it's in its range. But, you know, I like Ford. I like it.
Okay. Another one you like is one that we've talked about before. Lear Corporation, not the jet maker.
Not the jet guys. I brought them back because we talked about them about a month ago, but it was before they reported earnings. So they had this great earnings streak going on. They had beaten 11 times in a row, and so we can add number 12 to it. It was another good quarter because they're in the auto sector. They make the seating and electrical systems for the auto companies. So it's no surprise if Ford and their competitors are doing well that Lear is too, because it follows along with what the guidance is for the auto sales. So, you know, sales for their quarter were up about 1%, but they did improve on the margins, which is huge for them. And, you know, they raised guidance. So we're seeing these earnings estimates go up. We have a Zacks Rank 2 with them. Ford is also a Zacks Rank 2. And they're also cheap. They're trading under 10 times. I like anything in the single digits here. And you can see from their chart, they've been pulling back for a little while here, and in the sell-off, they pulled back down a little bit cheaper. So if you can get either one of these companies with these great fundamentals on the cheap, it's a good deal.
And their earnings are expected to be up 23% this year?
Yeah, they got the double digits too, and, you know, they're following right along with the car sales. So, you know, for now, even though everybody's worried about China, it's weakened a little bit, but not significantly to really impact the numbers on either one of these companies. Of course, that can all change going forward if, you know, they go into recession or just their sales slow even more dramatically. But right now, North America and to some extent Europe are strong enough to counter the other global slowing.
Okay. Do you own either of these?
I do not.
All right. Don't forget to check out more stock picks and stock picking strategies and commentary as well on our website, Zacks.com. Link to it all off the homepage. And if you're watching our videos on YouTube, don't forget also that you can subscribe to them there and even comment on them. With Tracey, I'm Terry Ruffalo.